What is the difference between inducement and liquidity? That's the topic of today's video. But first of all, I want to say that I'm very sorry that I didn't upload it last week a second video. I felt very sick and I posted that on my Instagram. That's why I decided to make a little break, and my voice also sounded very shit, so I thought, okay, it's a good time to make a little break. Now I'm back and I want to go over the inducement and liquidity. First of all, I want to say that inducement and liquidity are completely different, but sometimes they happen almost at the same time, and that's why a lot of people get confused about this topic. If you understand it once, you will never forget it, because it's easy and pretty simple. Let's go over inducement first. At the beginning I will explain you what it means, and after that I will go over some live chart examples. Inducement happens at a certain point on the markets where people think it's the right time to enter based on their analysis. What does that mean? Let's go over the chart and I will show you some examples. The first inducement can be supply or demand area, like this one. Price broke above, made a break of structure to the upside, and people would look to buy from this area because they are the last down close candle before the break of the structure. Now people would look to go long from this zone right here to aim to the upside. That's an area where people get induced into the markets, because that's an area where people place their orders to get taken into the markets. Let's go over another example. A retail example, support or resistance. People see these support and resistance areas and they get induced every time price comes back into this area. They want to see a bounce from this area and aim to the upside. So they get induced into the markets. They place their orders in this area. And let's go over the last example, the trend line. We can see there are 2 points that got touched and the third one, and people also got induced at this touch. People look for shorts or longs at trend lines, and as you can see, price came at this trend line and people got induced because they think it's the right time to go short based on their analysis. So it's over and over the same. People see something on the charts and they place orders because it's the right time to go long or short. But how does inducement help us? We can use this information to see where the liquidity really is. As you can see, we transition over to liquidity now, and I will explain to you now what liquidity really means. Liquidity doesn't take people into the markets, it takes them out of the markets. And now let's go over some examples of liquidity. People get induced right here, as we gone over before. The liquidity is below here because their stop losses are here. Like, you gotta think like that. So many people place their stop losses below here, and the institution and banks want your stop loss to be hit. So what they do, they seek liquidity. They push price below this area to hit your stop loss. So price goes down and takes the liquidity. So this area right here is the area where the liquidity is. And this area right here is the area where the inducement happens. Now you can see it almost happens at the same time, but they are completely different topics. Inducement is forcing people into the markets. Liquidity is taking people out of the markets. Let's go over another example with this support area. People are getting long from here. They are getting induced into the market. Now they placing their stop losses below here. They creating a lot of liquidity for the market, and what the market does is pretty simple. It goes down and seeks that liquidity to get stronger to the downside. So same again, the liquidity is right here below the area. The liquidity is here and it gets taken out right here or even lower, and the inducement is here, is the point where people like to get long. Let's go over the last and final example on this trend line. As we spoke earlier, the inducement happens here. People like to go short below the trend line. So now in the future, potentially price could come up, take these people out from here and continue to the downside. So it will seek the liquidity right there and takes the liquidity from this trend line. As we have learned today, inducement equals a point in the markets where people try to get long or short. That's pretty much inducement. Now liquidity means a point in the markets where people get taken out of the market. It's pretty simple. You don't need to overcomplicate this stuff. It can be complicated sometimes because it almost happens at the same time, but always remember, liquidity takes people out of the market. Inducement is an area where people like to get involved into the markets. So I hope this cleared many things up for you guys, and that's everything I wanted to say about this topic. If you want to see more of my content, you can go to my Instagram. It's called FX with Simon. I post there free content for you all almost daily, and also my live trades in my stories. And I would really appreciate a like, a subscription from you, and if you would ring the bell so you don't miss out on any videos. And that was already everything for today, and speak to you all soon.